Hi guys, it's Franz from Fractal Trading. The 22nd week of trading in 2016 has passed, and this is actually a really great week to kind of underline that if you are a long-term trend follower, you do have these market phases where nothing seems to be going on, where no signal is in sight and everything else that you got is simply failing. And this is kind of what this week shows us, that it can take only a very short time until all of a sudden you get a lot of markets that are showing you some worthy signals, and putting in some orders can't be a mistake when you follow your system. So we have a lot of currency pairs. We have new developments in gold and silver. We also see some stuff in the forex pairs, for example the British pound dollar, Australian yen, or the yen pairs in general, and the euro is also pretty interesting next to the New Zealand and the Australian dollar. We're not going to talk about all of those today, but let's simply have a look at the major developments. And gold remains one of the most interesting markets in this 2016 here, simply because it does keep on showing overall bullishness. You do get this market not having moved out of the balance zone on any time frame. Actually, on the weekly you just got it trading back, but starting the analysis here on the monthly chart, what you simply observe is this divergence that you get in the momentum indicator and in the price. This is this 4-year correction I have been mentioning, and now we get this market phase where the prices are trying to come out to the other side of the balance zone. In the balance zone they are breathing. This is exactly where the market wants to be, but if you just look at this kind of chart snapshot, you can see that the market is never really there. You always have the market oscillating above or below this balance zone, and it only comes into the balance zone when it needs to breathe, when it needs a correction. When no new information is coming in, the market will stay in that correction, and you do get markets that are trading around in the balance zone. If you then check the monthly chart, the prices will be right on top of this balance zone for years. For years this can happen. So you really have to show some patience. You really gotta have some patience in order to capture the breakout of this bracketed market and then see where the next move takes you. But you cannot force the market to do anything, and it doesn't really matter when you expect the breakout to happen. And gold really shows us that this is again the case here. You do need patience in this market. After the divergence has been created, we get this move inside of the balance zone, and we do not have any signal now that is created from the low right here on its way to the other side of the balance zone, getting a correction after that, not going lower than the previous low, and then exceeding what will be a fractal right at that point. Now this is the monthly chart, and the monthly chart is such a rough time frame that you may not get a fractal here. You would simply have to pay attention to the situation on the monthly chart. This gives you your overall trend direction, and in gold we are really looking now for this to come out and trade to the upside. And yes, we are expecting new highs. That's without a doubt. Once you get this breakout, we do expect new highs. On the monthly, you didn't have a fractal that you could trade for the breakout. On the weekly though, you do have a fractal, and if you go even lower on the daily or the 4-hour time frame, whichever you prefer to catch the next market trend, you do have fractals that appear much sooner than you see them on the monthly or on the weekly chart, and that gives you a better entry. But of course, please remember, you always have to exit this earlier as well. You will probably be out 5-6 times in a weekly or in a continuous weekly trend, or even monthly market move. The weekly chart in gold already presented us with this fractal down here. We bought it. We got out right below this candle because it closes below our EMA, our simple moving average actually, and simply ends the trend. Even though it did break out again here, which I also took for buy, the market wasn't able to move out to the upside. Instead, it was coming down, and last week I tried to point out that this area where I'm drawing that line now is the next most important support level. And that is simply because you get a fractal on the left side here. This is an internal correction of this move to the upside, and the bigger correction that follows the next impulse move, which is this one, and now you get the major market correction here, will usually stop where the previous internal correction had stopped. And this kind of seems to be what's going on here. Look at this week. It took out the support here. It went lower, as you can see when you look at the wick of the candle. And now this area was exactly where the dynamic support red line is running along. And now prices are trading higher. You probably won't, and this is always true in the marketplace, you probably won't get a straight move to the upside out all the way up to 2000. That's impossible. What you will get is significant levels being respected, and then the market coming up, correcting again, and then moving out. It could even be the case that it comes lower and then turns around, even though at some point when the market trades to the other side of the balance zone, you want to be thinking about shorting this again as soon as you get a continuation of the overall trend. And if you look at the monthly chart of gold, you would see that it doesn't take a lot for this market to come to the other side again. Now, as soon as it approaches price levels of, I don't know, maybe 1140, 1130, prices would be hovering around the bottom of the balance zone. And if you then get a fractal, again, a breakout fractal simply on the weekly, you would trade this to the downside simply because you are following the market, and the market is actually down. Okay, the market is down on the monthly chart. We are only trying now to catch this turnaround, but the turnaround has actually not been confirmed. It will only be confirmed when you get higher prices closing above the balance zone, continuously moving up. Even better, it would be even better to get a fractal here. As soon as it's broken, you can assume that the trend direction has changed. So as soon as you get the fractal on the other side on the balance zone or of the balance zone, you do have a trend reversal. And we're now looking at this here. We see this zone with the fractal and the red line being respected. Prices are higher. We assume it will hover around a little bit in here, and then we'll simply take the next breakout. And all that means is we still have to wait. Now, if you have a little bit of an eye for the technical aspects of the market, it doesn't take you much to see already at this point here at or in November 2014 that there is divergence in this market. If you just simply take a look like this from the price point of view, and here down from the indicators point of view, you can see there is divergence. However, the market didn't turn until more than 1 year later. Okay, and what this tells you is that even though you do have this understanding of technical analysis, and even though you do have this feel for the market because you have been doing this for 10 years, for 15 years, or whatever, it doesn't mean that you know when the market is going to turn. If you just buy this simply because you get this divergence, then you're totally off and you're not following the market. And in this regard, nobody says that the market can't come down here now again. You do have an momentum indicator that has moved to the other side of this zero line. If you get a market movement from here somewhere down to here or wherever, I don't know, and you do have this momentum indicator on the other side of the zero line, all that tells you is there was a major correction in here, and you can now hope for, or not hope for, but you can expect the momentum to totally build up anew. It went above the zero line, it kind of went into the balance zone, it was able to breathe long enough so that it can now build up pressure right from the start again. It's not like you're running into the danger of another divergence. And then therefore, we still need to have both directions in mind in this gold chart. The same is true for silver, even though this candle from last week is very convincing, and we really enjoy when these levels hold, but we would not buy this at that point. We're gonna wait until really a new high is there. And if you just think about where the market is right now, 1244, and what we're really expecting from the next move, somewhere or coming close at least to the old highs and then making new highs, you have so much space left in this market that I think there's absolutely no need to be buying dips, because there is no such thing as a dip. You only know that it's a dip after the fact. If you're wrong, you're always going to buy into the first leg of the trend reversal. So I don't like buying dips. I want to follow the trend. Let's have a look at another market that I already mentioned last week as well. This is the Australian yen forex pair. And I know that you don't care about this market, but you should, since you should care about any market that shows you the possibility for a trend continuation or a reversal. And when you look at the monthly chart, what you should see is this market is simply trading below the balance zone. It's trading below the balance zone. It's trading below the trend exit moving average. And it keeps doing that. It has been doing that ever since this very first breakout, or if you want, this black line here would be the major breakout. And this occurred in August 2015. Now it's now June 2016, so this market has been in a downtrend for all this time. Now we're not asking the question here of how nice and well this downtrend is moving, because that would give us a not such a great picture, but the fact is it's still moving down. And as soon as you get an overall situation that is that clear, you want to look at your lower time frame, at your trading time frame, and find an entry into this still ongoing downtrend. And this is what's happening in the Australian yen. You already did get this fractal breakout here. I had mentioned this before, and now it's supported, or the breakout is supported by yet another fractal breakout that occurred last week. Now when you take a look at the last 8 weeks here, that would include the breakout at this point. You are short now, and the first thing that happens is, just like usual in trend following, nothing. The market is simply moving sideways, and it needs to breathe after coming out of the balance zone in a really crazy and quick fashion, like it did with those two candles here. This market simply needs to breathe, and you almost got to be surprised that the market is not bouncing back up to test some of these dynamic resistance levels, to bounce off of them and then continue lower. This is actually very thankful. It takes a long time, of course. This is 1, 2, 3, 4, 5 weeks. You're in this position and nothing really has happened. But this 5th week now is kind of showing us that at least we're invested in the right direction. It still doesn't mean that it's going to be a profit. If you are sitting there at home while these 5 weeks are ongoing and you want to kind of find out what is happening internally in this market, what obviously you can do is check out the lower time frames. I don't really see the point in doing that. It would only make sense if it has a learning effect for you to understand the market dynamics. But there is no possible way, even when you look at the lower time frames, even all the Elliott wave people, the theory tells them that the market consists of itself, and I totally agree with that, but you cannot start and go into the waves and count the waves inside of another wave and then yet inside of that wave and then go even lower from there, because you simply don't know when the correction is over. You don't even know if it's a simple or complex correction until it is over. So the only choice, in my opinion, is trading the market and following the market price wherever it wants to go. And when you take a look at the Australian yen, we are just now at the 4-hour time frame. We looked at the weekly. We have 5 weeks going completely sideways, and now we are looking at those 5 weeks, and the cursor circling around the side moves shows you this time span. And when you look at a correction, it's always important to kind of try and see what behavior does the market show you or signal to you where it could end its movement, its correction movement here. And this is usually very obvious if you know what you have to look for. Now, let's again really quickly resume what the basic situation is. We are in a downtrend on the monthly chart, and the weekly has just given us 2 breakout fractals to the downside. So obviously we are in a downtrend, and anybody who is a trend trader who wants to buy into this market is simply completely off. And this is what you see here in this area. This is obviously now the end of the correction, since we are moving lower, or we have broken out below this low over to the left side. But this breakout that occurred at this point here, not only with this huge candle, including the huge wick that broke out above the fractal to the left side, but also the black line that I painted in here shows you, or is marking, the resistance or the upper border of this entire sideways movement. And this one is marked, of course, by this fractal and by this fractal and by all of these 2 fractals over here. If you get a price breaking out against the trend direction on top of this resistance line, that will be the end of your correction. And you are looking to get short. Now, you're not looking to sell the high of this, because you don't know if it goes out all the way up to here before it continues down. The probability is definitely on your side when you only look at this from a short perspective, to short it, to sell it, but you're not selling the high of it. You're selling the first breakout. And the 4-hour chart gives you the first fractal breakout at this point. There's another one right here. On the daily chart, you get your first breakout either at this point or at this point right here. Okay, and on the weekly, I already showed you what the situation is. Your breakout is at that point, and now you get another one. I like to trade the weekly. It's long, it's huge, and it really makes a difference over a longer period of time. And this last week has supported my view in the Australian dollar yen, even though I have no idea if this will remain or stay like that until the end of next week. Let's simply follow the price and follow the trading system, manage our risk, and once, twice, or maybe even 3 times in a year, we will get a huge move that will make up for anything else, the small losses, all the calculated risks that we're taking when we're trading. The British pound dollar is the subject of our next little analysis here in this video. Let's have a look first of all at the monthly chart to get an overall view of this market. Now, very important, when you look at the monthly chart, you should be able to find out that this is a trend, this is a correction, and now we're only looking for this trend to be continued. This first trend to be continued down to this side, to the downside. Now, when you look at the this chart, it should be fairly obvious to anybody that you really get a major market movement to the downside, and then exactly what I'm always talking about, there is no new incoming information. The market is now exhausted after moving, after dropping down hugely in 6 months or something like that. During that time, you do need, or the market needs, to breathe. It needs to come back and return to normal. And it does that by trading on top of the balanced zone. It will oscillate right on top of it. Okay, it will not move too far away from it. And here in the British pound dollar, you can again see the point that I was just trying to make in the Australian yen. You have this side move. The side move is marked with an upper border. This upper border is marked again by fractals. You only have to look for the fractals. Where are the most fractals? That will be your major resistance in this case. And then at the end of the correction, the market is breaking out on top of this upper resistance border, but it completely fails immediately and continues the trend to the downside, into the direction where you got your previous trend. So that tells us that the overall market, while we are in this phase all that time, while the British pound dollar from 2009, August 2009, out to July 2014, that is 5 years. All of those years, as a trend follower on the long time frame, you're not doing anything in this market. All you do is try to find the breakout to the downside, and you would actually get whipsawed in this market 2 or 3 times, because as you can see, there are fractals here, sell fractals here, and they are actually broken. But the market is not ready to continue the downtrend. It first has to go break the upper resistance, something that you would not expect. Only in order to continue down. You see a lot of people on Twitter and stuff calling this a fake out or a fake breakout. I don't really give what you want to call it or look at it. You just have to understand the market dynamics here, that this is a way for the market to catch people or get people to buy this and then take out their stops, and thereby gaining speed into the opposite direction and being able to unfold a downtrend. At this point here, this is not possible yet. So on the weekly chart, if you want to trade this, you do have the next signal. Now, there's no question to be asked. When you have a busy week, you come home, it's Friday, or if you trade the daily charts, you come home every day. You don't have to think a lot about this. You just have to know your system and follow it. Now we just found out that the British pound dollar is in a downtrend on the monthly chart, so we're only looking at shorts. Since this forex pair has been correcting during the last couple of months, we are now waiting. We are out. I was short from these fractals up here. Now I'm out and I'm waiting for the trend to be continued. I don't know if it will be continued right now. I like the bearish action of last week, but I don't know if the market is going to continue up a little bit more and then give me a breakout. And it may not even be this fractal here. It may be another one that maybe appears here, or maybe it will appear somewhere here as the market is coming down, taking that or creating that fractal and then taking it out. That is something that is totally up to the market. But what you should know is there is a fractal here, and if you sell it, you are paying attention to the overall trend, and that's what you want to do if you really want to catch the major market movements. Another interesting situation is coming up in the indices. They have been well, depends on what country you're looking at, but the US indices at least have been quite bullish in my opinion. Even though the last week doesn't tell us much, we are right off of the low that has been created at that point. Mind you, it's exactly at the same area where you find the most fractals in this chart, and also where you find these candles with these long wicks. They will actually show you the price levels or the price zones. If you have a look at this huge wick where prices did go because some people needed to be stopped out, or some people went short, or some people added to their position or whatever, but prices aren't able to close there. And if you get the penetration, like here, the penetration of that wick, and even a lower low, but again the market isn't able to close below it. Now I'm not saying you should go long here, I'm just saying this is very significant. If you don't get a continuous price movement to the downside, you're not in a downtrend, you're in a correction, and this correction, as you can now obviously see, is doing exactly what it's supposed to do. It's simply oscillating on top of, a little bit above, a little bit below the balance zone. It's coming back right into it though as soon as it has moved away from it too far, and that would be the case for this movement here. It has come out so far that it even hit this low. It went lower, but it isn't able to close below it. It isn't able to continue its movement to the downside. Instead, it trades back on top of the balance zone, even out of it to the other side, and now you have the perfect situation that you want to look for if you are trading the breakout for the next major market movement. Again, this takes a lot of time, but you have two fractals, a buy and a sell fractal. You have an OCO order in here, and you're simply calculating the risk and then getting out. of this market. Getting into this market, of course, and getting out as soon as the trend ends. I'm really sorry about that. Now, if you want to have a look at another indice here, for example, the DAX, I was talking about the breakout that occurred a couple of weeks ago already. Since then, price hasn't been able to do anything worthy. It's on top, exactly on top of the balance zone, and it doesn't look like it's going to go anywhere anytime soon. But that's only my perception of this. What I have is I have an order in here to buy, and I have an order in here to sell, and I'm now simply waiting for the weeks to pass, and at some point I will get a market movement, and it doesn't matter to me if it's to the upside or if it's to the downside. Now enjoy the rest of your weekend, and we'll see each other next week again.